XPeng is fresh off issuing 85 million shares on the Hong Kong Stock Exchange this week. China-based electric vehicle maker is now listed in both the U.S. and Hong Kong as it seeks to mitigate some geopolitical risk. Joining us now for more on the listing and the company going forward is XPeng President and Vice Chairman Brian Gu. Brian, always good to speak with you. Thanks for taking the time over here this morning. So take us through this. This is known as a dual primary listing. So that subjects the company to rules and oversight of both U.S. and Hong Kong regulators. Why subject the company to that type of scrutiny?
I think this is it.
Sure. Yeah. Thank you. Very glad to be here, Brian. Now, dual primary listing actually, has a number of benefits. One is that the company can be actually listed independently in Hong Kong, which means that it does not rely on a listing status in the U.S. to trade in Hong Kong. Most of the secondary listing in Hong Kong actually relies on U.S. listing. So a primary listing gives us the independent listing and trading ability. Secondly, is that the primary listing in Hong Kong actually gives us the ability to be eligible for Stock Connect, which means that the China-based A-share investors can, through Stock Connect, buy our shares in Hong Kong, which will give us the access to the Chinese capital markets, which also allows some of our customers can be our shareholders, which is also always our objective. So those benefits outweighs the additional hurdles that we need to cross to be listed. But on the other hand, those hurdles also make our company stronger and more compliant because we now satisfy both the Hong Kong and U.S. standards.
And Brian, it's Julie here. It's good to see you. So is this also a move to mitigate some of the potential current regulatory risk we are seeing come out of China? Are you, as an executive at a company that is based in China and listed in the U.S. as well as Hong Kong, are you concerned that Chinese regulators are going to say you're no longer allowed to do that and you can't list in the U.S. anymore? How big a risk is that in your view?
Well, to be frank, our dual prime listing process, we weren't aware of these regulatory changes, so that wasn't really the factor that factored into our decision to come to Hong Kong. But these changes, which are introduced in the recent days or weeks, are very new, so we're really need to study it. But the good thing is that we're already listed in the U.S. and now we're listed in Hong Kong. So we actually have a very solid footing as a dual listed company in global markets. So I think we're very confident that we can actually provide stable access for our development to the capital markets.
And, Brian, certainly there's been a lot of focus on the stock over the last, really 6 months or so. It's been a name that's been, caught up in a number of different trades. I'm curious, though, about the business, because you guys, along with a couple of your peers in the China EV market, reported some pretty positive data for the month of June in terms of sales trends. And I'm just curious, how that is shaping up as we get into July here, and we think back to, the trajectory you rode in the first half of the year, and how you're thinking about the second half.
Yeah, I think the performance of our business, as well as the overall EV sector in China, has been really strong. I think surprisingly strong. If you look at our monthly delivery, which we disclose every month, we've been probably more than doubling on an annual basis for the 10 or 11 straight months. So that's astonishing. And also, we have reported in our quarterly earnings that our gross margin had been increasing every quarter for the past 9 quarters. So not only the volume is increasing, but profitability is strong. So I think we're really, having a strong momentum in China. And if you look at the industry, the EV penetration in China has gone from 5% about a year ago to 10% today. It's more than doubled for the industry. So I think there is a strong wind behind our backs. I think it will carry through in the second half, because I think the second half typically is the stronger sales season for auto. So we are very hopeful that second half will have a stronger growth. On top of it, actually, we will be introducing brand new models. One will be the facelift G3, which is our first model. Now we have a makeover in the mid-cycle. And then the fourth quarter will be bringing our third brand new model, P5, to the market. So with 2 new models and the existing growth, we're very confident we can deliver stellar growth in the second half.
Brian, since you and I last spoke, Tesla has come under a lot more scrutiny in China regarding quality problems and how it sells its vehicles. Do you think XPeng and even some of your competitors are gaining market share because of these stumbles?
Well, I mean, I think Tesla is still very strong in China. I mean, if you look at their delivery numbers in last month, they came back very strongly. It has a tremendous brand in local market. Its products still viewed as a high technology, one of the potential leaders in a number of areas. And also, I think that they are being very aggressive with pricing. So I think Tesla is still going to be a very strong competitors, and I think that they have a very commanding market share. Probably not as high as last year when they have a very dominating share. But on the other hand, I think the Chinese players are catching up very quickly. Our product and as well as some of the other products that are being introduced by the leading players have very good and comparable specs, as well as better user, features compared to Tesla. And I think we're catching up very quickly. So you can see that in the last few months, our growth has outpaced the industry as well as Tesla in China. But I think it's a long race because I think ultimately this market will not be dominated by one or two companies. It will probably be a number of players occupying probably large market share positions, for example, 10% and above. So that will probably likely to be the trend, and we hope to be one of those top players.
And Brian, I know XPeng had started to export vehicles, I believe to Norway late last year. Do you think it's important that XPeng goes global?
Absolutely. I think smart EV as a product should be a global product. You should not be just design a technology for one particular market, especially that technology will involve the entire powertrain, the battery technology, the smart technology, autonomous driving. So much investment going into this product should make it competitive globally, not just in China. That's why we actually started the effort in Europe. We start selling in small numbers in Norway. We're building our presence in other countries in continental Europe. And I think for the next 4 to 24 months, we'll probably be launching our operations in a number of European countries. So I think by probably 12 to 18 months, we should have our capability built up in Europe. And then we want to introduce products that be designed for international markets. So I think that will be when we start to see a larger number of our sales.
And Brian, finally, I want to circle back to the listing. And in particular, just to sort of emphasize the point here, for U.S. investors, is there a message that you want to get across to them amidst the sell-off that we're seeing, of course, not just in XPeng, but in Chinese-based U.S.-listed companies broadly? Is there a message that you want to make sure American investors know about those U.S.-listed shares?
Yeah, I think one thing is maybe investors have to really look at the past and the longer horizon. I mean, Chinese ADRs has been one of the best better performing classes of security if you look at 10 years or beyond. So it has provided significant growth and opportunities for U.S. investors. But also along the way, there has been quite a bit of volatilities. And, in years like 2012, in years, there are, similar issues have impacted the shares trading in the U.S. But in the long run, I think because China growth opportunity is still very compelling, I think investors, if you're taking a longer term view, will be very, very much rewarded.
All right, we'll leave it there. XPeng President and Vice Chairman Brian Gu, always good to see you. Thanks for staying up for us. I know it's almost 10 o'clock over there in Hong Kong. We appreciate it.
Thank you.